All right, and welcome everybody to our Shop Expert live series. I'm here joined today by Crystal Anderson. Crystal is the principal risk manager here at Shopmonkey, but what I would say is even more important, if you don't mind me saying this, Crystal, is your wealth of knowledge and 20 plus years of experience in risk management, fraud prevention, payments, and all that good stuff. Do I got that right?
Yeah, yes.
Yeah. Nothing that makes somebody sweat. The reason why I reached out to you specifically to talk about this topic is I have found myself, whether it's conversing with people face to face or seeing comments online, whenever you're messing with somebody's money, whether it be their own personal money or their business's money, which in many ways is their personal money, it's something that's going to make emotions run high. And it's understandably so. So I wanted to bring some clarity around this topic that, depending on who you talk to, can very much be a muddy topic. And so I want to look to you to first help set the table when it comes to general payment processing, talking about that a little bit first, and then going into disputes and fraud and things like that. So, you good with that approach?
Let's do it.
Right. Okay, then we'll dive in. When it comes to general payment processing and just helping people get onto the same page with this, can you talk about some of those fundamental differences when it comes to the different payment options that are out there for specifically for small businesses? You've got Apple Pay these days, you've got all these other things going on.
Yeah, for
Yeah, can
sure.
you speak to
Yeah, for sure. I mean, there's definitely a lot of avenues to increase the sales to get those payments through. So first, we're going to have cash, right? Cash is king. But unfortunately, not a lot of people carry cash on them. Cash is great for businesses because there's no strings attached. It's a secure form of payment, but just a lot of people don't have the liquidity to make large purchases on cash. So then you have credit cards. Credit cards is all about the convenience for the card holder. So if you think about rewards, miles, cash back, those are all great incentives for the card holder. But for businesses, those perks are going to come at a price, which means higher fees. And then you've got debit cards, right? So debit cards are great for businesses, but there are limitations to that because the available limit is heavily tied to how much money that individual has in their bank account that is
Sure.
associated with their debit card. And then you've got Apple Pay and other mobile wallets, which are super convenient. It requires some tech, right? You got to have a
Mhm.
smartphone, you got to know how to use it, you got to set it up. But it does come with security features like tokenization and the biometric authentication.
Got it. Got it. And when it comes to like the tokenization, the biometric authentication, you talked about, cash is king. I get that. It's when it's a one-to-one sort of thing, provided we're not talking about counterfeit dollars. All of that does make sense. But with that tokenization, what are you seeing there? Like, are you expecting to see more of that? Do you see better security there? Or are the systems still kind of being built up and trying to follow and catch up with some of that technology?
I think the technology is definitely there, but it's about the end user actually setting that up, right? Because
Okay.
you have to think about the time that it's going to take to set that up. Do they have a smartphone? And
Yeah.
it's very segmented types of people that will utilize this feature. And you have late adopters as well. But it is a very secure form of payment for, especially for fraud. It's not really going
Got
to
it.
help with some of the other reason codes, but it will
Right.
help mitigate fraud in those transactions.
Okay. And you said reason codes, and I want to come back to that in a little bit, but I do have another question to ask. I
Sure.
heard you mention points, rewards cards. Those are the types of, I have two cards that I use, and it's all for those reasons. But it sounded like there's a correlation between that and credit card rates that are out there. I would think that credit card rates are based purely on volume, but is that not necessarily the case?
No, so those rewards are going to get paid by someone, right? And so it's the fees are going to be passed on to the merchant that is actually processing those payments. So whenever those transactions do come through, you might notice, wow, this fee is a lot higher than this other card. And the reason why it's going to be different is the type of card. So, right, you've got your rewards cards, you've got maybe Amex, and we all know Amex has higher
Mhm.
rates than everyone else. And then you might have a debit card. And so you're going to
Yeah.
see that the debit card is going to have a lot lower fee than those reward cards.
Okay. So there's variations from the rewards that, but they're all still processed by a credit card processor or a payment processor.
Mhm.
What are the various differences? Because there are quite a few processors out there.
Yeah. So, I mean, all processors are going to have the same kind of interchange fees. Those are coming directly from the bank. So it's not like if you go to processor A and processor B with the same card that you're going to get hit with different fees because the interchange fee is going to be pretty universal. So there really is no difference there from one processor to the other when it comes to the fees that are associated with that specific card.
Got it. Okay. So, a couple things that were touched upon, but at the end of the day, before we move into disputes and fraud and things like that, when it comes to just payment processing in general, from that shop owner's perspective, what are maybe the most important things for them to absolutely be aware of all the time when it comes to that? Because there are people knocking on their doors, they're always getting pitched for different things. What do they need to know more than anything else?
So are you asking what they need to look for when they're trying to pick a processor?
I guess what are the fundamental things that might be different from processor to processor so they can be aware of when it comes to payment processing in general, what's kind of the basis of my of any sort of decision making or evaluations that I need to think about?
Gotcha, gotcha. Okay. So all processors exist to do one main thing, right? And that's to facilitate the payment. That's to get the payment from the consumer to the business, right? So all processors do that, but they're not all built the same. So the real difference is going to lie in how do they do it and what else are they going to bring to the table, right? So if you think about it, there are some processors that are set up for specific business models,
Hmm.
specific industries. So, right, if you are let's say, a restaurant, you're probably going to
Hmm.
gravitate to Toast because they have all the tools that are necessary for the daily operations of a
Got it.
restaurant.
Yep.
But when looking and evaluating any kind of processor, you do have those salespeople come knocking on your door. They try to get you to focus on the fees.
Hmm.
At the end of the day, when you tally up all the fees, the difference between the processor is really going to be pennies on the dollar. It's not going to be such a drastic difference, right? So when you're looking for, or any business that is looking for a processor, they have to ask bigger questions. They have to ask, is this processor going to solve the problems that the business is facing? Do they have the right tools that the business needs?
Hmm.
Um, does the processor integrate with their current system?
Hmm.
And things like, do they provide support when you actually need it?
Yeah.
Right. So that is a big one. Support is a really big function that all businesses need. But ultimately, when a business is trying to decide on a different processor, it's more than just accepting payments. It's about finding a partner that's going to understand the business, it's going to
Hmm.
support their needs, and ultimately help the business thrive.
Okay. Makes a lot of sense. I'm comfortable moving on to the next section then.
Okay.
We've set the table.
All right.
Disputes and fraud. This is really the juicy stuff and the thing that can really and understandably so get people very frustrated. So I want to start with something really basic here, something
Okay.
that I've heard many, many times before. The card was authorized. How can it be disputed? Let's start with just the basic. What's
Basic.
what's the definition of authorization? How do people need to look at that sort of stuff?
Definitely. It's a good question. A lot of feedback that we get back, specifically when it comes to disputes, it got authorized.
Hmm.
So the understanding of a dispute will help settle it because an authorization is just the bank giving you a thumbs up that the funds are available. It's a
Okay.
green light saying, you requested $500. I'm going to look at this card limit or this bank account. Is there $500 available?
Really transactional, just at the most basic fundamental
From
level.
just, is there money available? If
Okay.
there's not funds available, you're gonna get a decline, right?
Okay.
Or if the CVV is wrong, you're gonna get that decline from the bank.
Hmm.
But what an authorization does not do is it's not guaranteeing that the customer isn't going to come back and dispute it later. It's just a
Right.
green light saying there's funds available.
Okay. So, with that being said, I have a lot more questions, but I want to maintain some order in my questions here because my
Okay.
mind's going all over the place.
All right.
You mentioned just because it's authorized, that does not ensure that the consumer cannot come back later and
Right.
dispute that. So, let's go down that path just a little bit.
Okay.
I want to better understand why is it so easy for a consumer to come back and dispute something.
For sure.
Let's start there.
Yeah. So it does seem like disputes can be easily initiated, but we
Mhm.
have to understand that when it comes to disputes, that process is there to protect the consumer. It is not there to protect the business. This is a consumer based function or feature, if you will, that
Mhm.
all banks give to all customers. This is a feature that is allowed. So a consumer can go back to their bank and lodge a complaint for various reason codes. And the most common is going to be fraud, credit not received, or service not received. Those are going to be your common ones. But this is coming from your customer and their bank.
Just
Uh-huh.
for clarification, that customer slash consumer and the bank relationship, there's a
Mhm.
credit card in the middle. Can
Mhm.
you clarify what that relationship looks like with those three points? Like, what's the bank's relationship with the credit card, and how does that compare contrast with the consumer's relationship with the credit card?
Yeah, for sure. So for a basic credit card, it's going to be the bank is extending a line of credit to an
Mhm.
end user.
Okay,
Now, I've got a $20,000 credit limit. Or it's going to be a bank with a debit card that is tied to your actual bank account. So at the end of the day, these customers are also the customer of the bank or the lender for the credit card company.
got it.
No worries. So to better understand the dispute process is that the actual process of it all is actually coming from two acts from the 70s. So this process was established back in the 70s,
Okay,
two very specific acts. And that's the Fair Credit Billing Act and the Electronic Funds Transfer Act.
okay,
So, they got together, protect the consumers. Now we've got the dispute process that we have to follow. And it's
okay.
also important to understand that all processors have to follow this regulation. We all operate the same.
Mhm.
All processors have to follow the same dispute flow, when an actual dispute comes out. In the early stages, customer makes charge,
Right.
and then they contact their bank and they lodge some kind of complaint. They're unhappy with something. At that point, the bank or the lender is going to review the claims and decide, am I going to push this to an actual full blown dispute? The bank does have a chance to mitigate it and prevent the dispute from happening, but
Okay.
in most cases, it will just evolve into an actual dispute.
Got it. So thinking about that and thinking about how the bank can intervene early on,
Mhm.
is it appropriate to even consider that a business is innocent until proven guilty? How does that work?
Absolutely. So it's going to be super critical that all businesses kind of cover themselves.
Guilty until proven innocent is what.
Yes. They're
Okay.
basically guilty, right? You have to prove without a doubt that you rendered services, that the customer authorized the charge, they understood your terms of service, you've got signatures, pictures. You really have to prove that the cardholder authorized it, they received it, and it was to their satisfaction.
Got it.
And
Oh,
it falls on the business that actually ran the card.
okay. That all makes sense. But now here's what I want to understand better. I've personally, throughout the years, been in shop environments when, you're having a conversation with somebody and they'll talk about a dispute that they've lost, even though they had a signature.
Mhm.
Why is that happening if they're proving that services were rendered with a signature?
So, an authorization and a signature doesn't always adequately combat a dispute reason code,
Okay.
right? So, if a reason code is coming in for not received.
Hmm.
A signature on an invoice is not an appropriate amount of compelling evidence to prove that the customer received the product, right? It's just one piece that is necessary as you compile multiple layers of documentation. The signature, the authorizations are little pieces to the puzzle that you should always maintain, but there's
Mm,
additional best practices that are needed to always secure yourself,
right,
right? You don't know your customers that well. Maybe they come in one time and you never see them again,
right.
right? So you have to be ready that that customer could potentially say, "Oh, I forgot I did this charge. Show me what I did." Right? And so now the burden of proof falls on the shop, the business,
Yeah,
to prove you charged XYZ and it was delivered on this date and here's the communication we did, and satisfy the bank's need
got it.
for that dispute.
So there's a significant amount of power that the consumer wields in this sort of situation.
Yes.
And it sounds like things like an authorization and a signature are one of many
Yes.
ideal and or necessary components that every shop should be collecting and communicating to the consumer or their customers. Is that
Yeah.
okay?
Yeah. Best practices there.
All right.
Absolutely.
So let's talk more about best practices. Thinking about best practices, thinking about everything that should be communicated, which I'm guessing doesn't guarantee victory, but sets you up or gives you the best chances of victory
Yeah.
in combating a chargeback or a dispute or something like that.
Hmm.
What does that look like? And I know your experience goes way beyond the shop environment, but let's
Hmm.
keep it to the shop environment for our audience, thinking about those types of transactions.
So you're asking for like specific, what are best practices for shops?
Is signage on a signage on the wall? I see that all the time. There's a framed picture that has a commentary about how they receive payments and things like that. Is that enough, or is there more that's required with respect to the fine print or even visual inspections? What does that look like?
So best practices for shops is going to be specific to like terms of service, right?
Okay.
So applying terms of service to like the invoice is imperative, right? So you're right. There are a lot of shops who will have signage. They'll have their terms on the website.
Right.
How can
Hmm.
you prove that your customer acknowledged your terms?
Got it.
So having it on the invoice is the most ideal place where you should have that and get it signed, acknowledged by the customer. And this is the place where businesses should be putting all their terms. What's your refund policy? What's the time
Okay.
frame I have to call back and say such and such that I got done isn't working? How do I
What
get back?
about communication?
Yes, communication definitely matters. And in most cases, effective and consistent communication can help prevent disputes. So you have to put yourself in your customer's place, right? If the customer came through and ordered a service
Hmm.
and expected it to be completed on a certain date,
Hmm.
should definitely communicate that with your customer.
Got
So what are they going to do? They're not going to call you. They're going to go to their bank and say, "Hey, bank, like I was supposed to get it on the 1st and now it's the 20th and I haven't gotten it yet." And now
right.
you got a dispute. Whereas if the shop communicates that with them, the customer can be informed and potentially alleviate any kind of potential dispute that would be coming in just by communicating.
Got it. And I am curious, do banks actually give guidance on what they're looking for from the business of saying, hey, we need you to provide X, Y, and Z? Or do they leave that up to the business to provide them and go from there?
So there's a core part of what is considered compelling evidence.
Okay.
So you got to get the authorization, gotta get signatures. It's all the documentation that you are essentially gathering to prove the customer got what they paid for and the services were fulfilled.
Got
At
it.
the end of the day, that is really at the core of the compelling evidence. But depending on the reason code, there are specific documents that are needed, right?
Okay.
So Let's say the charge is for a shipment and it's supposed to get delivered to an address.
Hmm.
So, what's going to be appropriate for that dispute is probably going to be your shipping label, your tracking number. Did you get a POD? Did you get any pictures? You're going to need that
Interesting.
for that, where you
Okay.
wouldn't need it for credit not received. So,
So
each one is different.
got it. So even if you're talking about, you use the example of a part might be delayed. Part was delayed. Is it in my best interest then to be recording when I receive that part in and being able to have a paper trail to show that there was a delay and not negligence per se on my part? Can that not guarantee overcoming the dispute, but help contribute towards or my chances of a positive outcome? Little things like that, do those matter?
The shop also needs to understand that the customer paid with the expectation that it was going to be delivered on a specific date,
Got
right?
it.
If it is delayed, it's out of your
Mhm.
control.
More of a communication
It's
between the shop and the customer to clarify that if there are going to be delays.
because what if the customer doesn't want to wait? They can't wait. Gotta offer some kind of refund, some working with the customer, because at the end of the day, you have to make the customer happy so
Mm,
they can lodge a complaint and file a dispute.
okay. So when it comes to the fine print then, because it sounds to me like that's where a lot of best practices might be being
Mhm.
missed. What are, just to help summarize, what are some of the things that people should be including if they're not already today in that fine print?
So you want to have what are your terms,
Hmm.
especially when it comes to refunds or any kind of special order items. It has to be beyond clear. Terms have to be really clear and acknowledged by your customer for them to carry weight with the bank. If the documentation isn't signed, then there's no proof, right, that it was acknowledged.
Hmm.
It's the same concept of signage in the store. Can you prove that the customer acknowledged it and actually reviewed it?
Yeah.
What are your terms?
Hmm.
Spell it out. Put it plain, document it, get it signed, and cover yourself because that will help a lot when the bank is actually reviewing all the documentation that comes from the disputes.
Is there any issue if the terms are a couple paragraphs where it could be a quarter of a page because it is very detailed? Is that a bad thing per se, or is it really just more about the clarity and directness in them?
It's the clarity and the directness.
Okay.
Make it clear.
Oh, very good. Okay, so help me summarize this because you covered a lot. What I'm most curious about is this. In your experience in dealing with fraud, fraud prevention, disputes, all that sort of stuff,
Mhm.
just kind of closing and winding things down, what are some of the most common mistakes you have observed to be made that are maybe innocent mistakes, but could have helped create a different outcome? And what do those mistakes look like and what should have been done?
Like ways to prevent fraud and disputes?
Actually, let's talk with respect to prevention. What have you seen when it comes to people making common mistakes?
Common mistakes, specific when it comes to fraud, is shops don't follow their gut. They know that something's potentially wrong, but they solely rely on, I got an authorization, right?
Mm,
Authorizations don't mean that it's not
yeah,
fraud. It doesn't mean that it's going to come back as a dispute. It only means funds are there.
but it
So
feels so good when you realize those funds are there and you can do this
it clear,
job.
right? It got an
Yeah.
approval. But when those transactions start rolling in and they're high dollar amounts, they're out of the norm. Looking back on it, shops were like, I should have seen that. I should have caught
Mhm.
that. Right? Because
Okay.
something wasn't right. It was a little suspicious, but they kept proceeding. So I would say to protect from fraud, the golden rule is trust but verify.
Got it.
Be
Okay.
aware of suspicious activity, be aware of something that's just not right, and document everything. I cannot stress this enough because shops miss that. They get busy. There's a lot of assumptions on who holds, liability, who's
Hmm.
responsible, where do the disputes come from. Documentation is everything when it comes to the authorization, the communications, the signatures, before and after pictures. You always have to be ready, especially with those higher dollar amounts,
Yeah.
being ready that at any time a transaction can dispute.
Yeah.
Because this is a risk that businesses take on when they take on credit cards, because it can always get disputed.
Got it.
So I would say, when it comes to that, you just got to be aware for that suspicious activity. So we do have an acronym that helps identify suspicious activity, right?
Hmm.
And it's just called SPOT. This is a pretty simple tactic that all businesses can use. So the first one is S, right? Suspicious activity,
Hmm.
suspicious behavior. You've got back-to-back orders. You've got bulk orders, large ticket items. It's not normal. You should be a little bit aware, right? You should pause.
Got it.
Then they become pushy, they become persistent. They just try to do everything to rush the sale so that you don't ask questions and you get blinded by large incoming sales.
Interesting.
Very persistent when it's coming to suspicious activity. And then it's out of the blue. You get a random order for 40 tires or for something that's not normal. It's so out of the
Right.
blue.
Yeah.
And the last one, it's too good to be true, because we all know if it's too good to be true, it usually is. So these little things you should always be aware of as a business owner, especially a shop, that this does happen.
Yeah.
Fraud does happen every single day, but there are best practices and things that you should be aware of to help mitigate it, because you're in the front line, right? Shops see everything coming in, they're answering the phones. You have high visibility to stop this.
Well, I'll say this. It's interesting going through that acronym of STOP because my background is in distribution. So I was selling to shops. I was not the customer of shops, but that was my interaction with them. Anytime we did have a fraud issue, it actually pretty much followed that. It was multiples of big ticket items, which when you're a warehouse, who doesn't want to get these big
Right,
ticket orders?
right.
Oftentimes they came from Canada. So it's like, oh, yeah, we have Canadian customers, but it was a little bit, oh, that's interesting. It was always a new customer within the last month. And yeah, so point being, that makes complete sense.
It happens, and sometimes you just always have to pause and vet your customers, because truly, if it's too good to be true, it usually is. You gotta vet them. Do your
Yeah.
research, do your due diligence before you render, that bulk order.
Kind of covered payments, or not kind of. We covered payments. We talked about disputes. We talked about fraud. We did have a couple of questions that came in. So do you mind? Do you have time for a couple of questions?
Absolutely.
Okay,
Yeah.
cool. So this one is from Carrie in Arkansas. What are some of the most important things that a shop can, or no, wait, I'm sorry. Is there anything that high volume businesses, such as mass retailers, do that a small business can also do? Sometimes we think about this mass retailer like Target has access to all of these additional resources. Is there anything that maybe large volume processing companies are doing that can or should be happening at the small business level?
I think it's coming to the validation. So those larger businesses are obviously processing bigger transactions.
Exactly.
With that, they're doing more due diligence before letting those big orders go through. The bigger ones are probably really vetting the customer. They're probably making sure the business is valid. They're probably having more communication. They probably have more tools to vet this potential relationship, whereas smaller businesses do not do that. They get an order, they fulfill it, no questions asked, right? So I think bigger businesses are truly pausing to vet their customers more thoroughly.
Got it. That makes sense. When it comes to these topics, are there any variations state by state, or is this nationwide? Like, are these rules nationwide?
Nationwide, all like specifically to disputes.
Doesn't matter what state you're in.
What's different is how each bank handles their disputes, but the process is the same across all processors, making the notification, gathering the compelling evidence, and submitting it to the bank. So we also have to be mindful that it's the banks that are reviewing the documentation, and it is the bank that is rendering those decisions. It's not the processor. No processor is making the ruling on disputes. It is always going to be the bank.
Got it. Okay. Very good. Excellent. Well, Crystal, thank you very much.
Of
Appreciate it.
course.
Anything else worth mentioning? Otherwise, we can close things down.
Now, I think the main thing is trust but verify.
All
Listen
right.
to your gut.
Right.
Follow those best practices and document. Document, document. Cannot stress that enough. Pictures are worth 1,000 words, and banks will want you to prove that the customer got what they paid for and that it was fulfilled. Always keep that in mind when gathering that documentation.
Awesome. Thank you so much,
All
Crystal.
right.
Appreciate it.
Thanks.
All right. Bye. Okay, so we're going to go ahead and close down for the day. Thank you, everybody who joined us, and look for this to come on out and be available to a larger audience here shortly. Have a good day.